Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. The market edges higher, ending the week in the green ahead of the Fed chief's speech at Jackson Hole. The Nifty and the Sensex end with gains of 1% each. 38 of the 50 Nifty stocks finished the trading week with gains. Promoters and strategic investors continue the selling spree on Dalal Street. Adani likely to have sold nearly 3% stake in Ambuja Cements for over 4,200 crore rupees. Shares of over a dozen companies worth more than 20,000 crore rupees have changed hands this week. More than a year after the competition law amendment was passed by Parliament, the government is likely to notify a critical provision on deal value threshold, which makes the CCIs not mandatory for deals above 2,000 crore rupees. The Congress party has raised concerns over the delay in notifying the provision, alleging preferential treatment to certain corporate groups and the lack of regulatory oversight. That's an exclusive. Sebi bans Anil Ambani and 24 other entities, including former Reliance Home Finance officials, for 5 years. The regulator charges Anil Ambani of orchestrating a fraudulent scheme to siphon funds by disguising them as loans to entities linked to himself. The regulator also imposes a 25 crore rupee penalty on him. Prime Minister Modi in Ukraine for the second leg of his two-nation trip pays homage to the statue of Mahatma Gandhi in the capital, Kyiv. His trip to Ukraine is the first by a Prime Minister since the nation gained independence from Soviet rule in 1991 and comes a month after his meeting with Russian President Putin in Moscow. The Indian government bans 156 fixed-dose combination drugs, saying they're likely to involve risk to human beings. The list includes commonly used painkillers, antibiotics and multivitamins. The Consumer Affairs Ministry flags concerns about the surge in quick commerce and its impact on Kirana stores. Sources say the government fears discounts and dark stores run by quick commerce players could hurt local shops. 14 Indian tourists are killed and several injured after a bus plunges into a river in Nepal. 16 people rescued so far. At least 11 are still missing. The U.S. expresses optimism about a Gaza ceasefire being in sight even as Israeli operations continue in the region. Netanyahu denies reports suggesting that Israel is considering agreeing to an international force being deployed along the narrow border strip separating Gaza and Egypt. A UN official says that 90% of Gaza's 2 million residents have been displaced since the war began in October last year.
On behalf of everyone whose story could only be written in the greatest nation on earth, I accept your nomination to be President of the United States of America.
Kamala Harris pledges to chart a new way forward as she accepts the Democratic Party's presidential nomination, promises to unite the nation and be the president for all Americans. Well, we'll get to the U.S. elections in just a bit, but first up, the market action of the day. The Dalal Street ending the week flat ahead of the Fed chair's speech at the Jackson Hole event later today. 38 out of the 50 Nifty stocks ended with gains this week, and Powell's speech will be closely watched as the markets will look for cues on when the U.S. central bank will start cutting rates. The market has already factored in the start of a rate cut cycle from September. So let's take a quick check of the markets. 33 points higher on the Sensex, the Nifty closing 11 points higher, the mid-cap index and the Nifty Bank closing in the red today. Well, let's talk about the macros now. Goldman Sachs has cut India's GDP forecast for 2024 and 2025, citing a 35% contraction in government spending due to elections in the April to June quarter. Goldman has cut its 2024 growth forecast from 6.9% earlier to 6.7%. It's also cut the GDP estimate for 2025 from 6.6% earlier to 6.4%. The brokerage expects a fiscal drag as the government targets a fiscal deficit of below 4.5% from the next fiscal. It also predicts headwinds to consumption growth. Goldman also added that it expects earlier monetary policy to offset some of the challenges in 2025. Now, promoters and strategic investors continue the selling spree on Dalal Street. Adani Group is likely to have sold nearly 3% stake in Ambuja Cements for over 4,200 crore rupees. Shares of over a dozen companies worth more than 20,000 crore rupees have changed hands this week. Nimesh is standing by with a roundup of the block deals. What a week it's been, Nimesh.
Oh, absolutely. A big week for almost 20,000 crores of block deals done, and it looks like it's only the promoters and the private equity which are laughing their way to the bank. Look at today's 4 large block deals itself. The largest was Ambuja Cement. The parent Adani promoter sold nearly 3% equity, and they've raised close to 4,250 crores. Tata Technologies was another large block, 2.5% equity got changed hands in a deal worth 1,000 crores. Nykaa saw a large block in the morning trade of 1.4% equity, and the entities raised close to 800 crores. And GMR Airport saw a large block of 1 crore shares, and they raised close to 500 crores. So this was today's large block. But look at even yesterday, there were some large block deals. The biggest of them was Kalyan Jewelers. The Warburg Pincus, the private equity has completely cleaned out. They sold 6.5% in a block deal, and they've raised close to 3,500 crores. The other large block was PNB Housing. 3% equity sold by the private equity, and they've raised close to 1,032 crores. There were other small block deals as well. Some like Eris Life saw a large block of 7.5%. Deal worth close to 1,200 crores, and even Alchem Lab saw a deal where the promoters sold and raised close to 500 crore rupees. As I said, PNB Housing saw another large block deal today, 5% sold by another private equity investor, General Atlantic, and they raised close to 1,200 crores. And even there was a big deal from Zomato beginning of the week where Ant Investment sold and raised close to 5,400 crores. So big week in terms of block deals, 20,000 crores. But my sense is this momentum is only likely to continue, and you may see much more larger deals in the days to come.
Okay, we will be watching that closely, Nimesh, and I know you're going to have your eye on that block deal ticker. Many thanks for joining us. The National Company Law Tribunal has approved Adani Power's 4,100 crore rupee resolution plan to acquire Lanco Amarkantak Power. The acquisition is part of LAPL's ongoing corporate insolvency resolution process. The takeover is expected to be completed by the middle of October and will increase Adani Power's generation capacity to nearly 16,000 megawatts. Now, on to a CNBC-TV18 exclusive. More than a year after the competition amendment law was passed by Parliament and received the President's assent, a critical provision on deal value threshold in the law is yet to be notified. Now, sources say the government is likely to make CCI's approval mandatory for deals above 2,000 crore rupees. The Congress party has questioned preferential treatment to certain corporate groups and the lack of regulatory oversight. Parikshit is standing by now with the exclusive details. Parikshit, it's long pending. More than a year after the amended law was passed, this provision has not been notified. Are we likely to see some action soon?
That's right. Experts have been questioning the delay over notification of the deal value threshold, a very critical provision of the new competition law, which will change India's merger and acquisition landscape. Now, why is this important? The deal value threshold provision of the Competition Amendment Bill 2023 makes it mandatory for any deal in the country above 2,000 crores to be referred to the CCI for approval. Now, what experts are questioning is why the delay. There have been a lot of companies which have gone into the market, acquired a lot of companies in the last 1.5 years, and the Congress today is also questioning favoritism or preferential treatment to certain corporate groups. Jairam Ramesh of the Congress has gone on to the extent of saying, why is the CCI favoring the Adani Group and giving them all approvals, but at the same time they are questioning other conglomerates. Now, what the deal value threshold would do, that deals such as the Adani acquisition of Penna Cement or Zomato's acquisition of Paytm's ticketing business will then have to be referred necessarily to the CCI for approval. At the moment, as the law stands, they do not need to be sent to the CCI for approval because they fit into certain exemption categories, such as the value of the targeted acquisition is less than 450 crores, or the turnover of the asset being acquired is less than 1,250 crores. But if this law, the DVT law, comes into effect, all such deals will have to be mandatorily referred to the CCI for approval. What the Congress party is also highlighting that over the last 1 year, we've seen the Adani Group acquiring a number of assets in the cement sector, in the power sector, such as Penna Cement, merger of Ambuja Cement and Adani Enterprises. They're set to acquire Lanco Amarkantak Power. They've also acquired Mirzapur Thermal Energy and also acquired solar assets from SL Green Energy Private Limited. So the Congress party is essentially saying, why are one group or one or two groups being benefited in the country, but others are being scrutinized. On the back of it, we hear that the MCA, which is the nodal body for the Competition Commission of India, is now going to notify the DVT rule very soon, and the entire business ecosystem in the country is watching out for this provision.
All right, Parikshit, many thanks for joining us. Well, here's the latest in Reliance Capital's insolvency process. The Committee of Creditors has moved the Company Law Appellate Tribunal. They are seeking the forfeiture of the 2,750 crore rupees deposit paid by Hindujas in case of a default. The committee has asked the tribunal to direct the Hinduja Group to pay interest at 16.6% on the upfront payment of 9,660 crore rupees with effect from the 27th of May. It's also sought the interest payment on debt component of 7,300 crore rupees from the 8th of August 2024 till the actual date of payment. The committee has argued that the delay in the payout has resulted in a loss of over 400 crore rupees. Market regulator Sebi has banned Anil Ambani and 24 other entities, including the former Reliance Home Finance officials, for 5 years. The regulator has charged Anil Ambani of orchestrating a fraudulent scheme to siphon funds by disguising them as loans to entities linked to himself. Vivek is standing by now with more from the Sebi order. Vivek, ADAG stocks under pressure today on the back of this. Take us through Sebi's key findings.
Listed shares of the ADAG group stocks were under pressure. This on the back of SEBI order that has gone ahead and taken action against Anil Ambani as well as other notices. This particular action actually refers to the RHFL, that is Reliance Home Finance Limited, fraud case. Now, we've actually gone through the order of SEBI, and SEBI has issued an order that has actually gone ahead and found out how exactly was this fraud being committed. Also, they've gone ahead and issued strict orders, and action has been taken against number one, Anil Ambani, as well as other key managerial personnel at RHFL. Number one, SEBI has taken a dim view of the ex-promoter's role in the case involving the diversion of funds and has issued strict directives against Anil Ambani as well as 24 other entities. SEBI has taken action against Anil Ambani for their involvement in the diversion of funds. And number one, what's happened is that they've gone ahead and been demarred from the securities market for a period of 5 years. Along with that, they've also been fined a sum total of 25 crores. Now, SEBI findings establish a fraudulent scheme orchestrated by Anil Ambani, where SEBI notes that the scheme was administered by the key managerial personnel to siphon off funds from the public listed entity. The modus operandi, as per SEBI, indicates that RHFL structured loans to credit unworthy conduits as well as onward borrowers, where the onward borrowers were actually promoter-linked entities. These loans resulted in erosion of the company's finances on eventually being declared as NPAs. It is important to note that these loans were given as general purpose working capital loans. So what are the actions that SEBI has taken? SEBI, number one, has gone ahead and barred RHFL from dealing in the securities market for 6 months, has also barred Anil Ambani from dealing in the securities market for a period of 5 years. Anil Ambani has also been barred from associating with any listed entity as director or KMP, that is the key managerial personnel, for 5 years. He's also been barred from associating with SEBI intermediary as director or KMP for a period of 5 years. Along with that, like we mentioned earlier, there has also been a monetary penalty that has gone ahead and been imposed on Anil Ambani as well as other KMPs as far as RHFL is concerned. All of this led to significant erosion as far as ADAG listed group stocks were concerned today.
All right, appreciate you joining us, Vivek. Now, the Director General of Civil Aviation has imposed a fine of 90 lakh rupees on Air India for safety violations. Additionally, the regulator has penalized the Director of Operations with a fine of 6 lakh rupees and the Director of Training with a fine of 3 lakh rupees. The DGC has said Air India operated a flight commanded by non-trainer line captain paired with a non-line released first officer. In other words, a trainee co-pilot who's supposed to otherwise fly with a trainer captain was in this case flying with a non-trainer captain. The DGC says this is a serious scheduling incident having significant safety ramifications. Now, here's a CNBC-TV18 exclusive. After showing interest in entering the life insurance segment, Star Health Insurance is exploring opportunities to foray into the motor insurance space as well. Sources tell us that the company is conducting surveys amongst distributors and partners for feedback. However, Star Health's plans depend on the government approving the composite life insurance scheme. The government has banned 156 fixed-dose combination drugs after a review found that they're likely to involve risks to human beings. Now, the list includes commonly used painkillers, antibiotics and multivitamins. Ekta is standing by with more. Ekta, take us through the rationale behind this ban and how this is likely to impact companies and, more importantly, what does it mean for consumers?
Thanks for that. Well, yes, in its continued crackdown on fixed dose combinations or FDC drugs, the government has banned 156 FTCs with immediate effect, citing concerns about their irrationality and potential risks to human health with safer alternatives available. FTCs, remember, combine 2 or more APIs or active pharmaceutical ingredients in fixed ratios in the drug. Now, the latest list of banned drugs covers various therapeutic areas from pain and fever, anti-allergy treatments, antibiotics, medications for acidity and nausea, joints and arthritis treatments, and health supplements. This action, remember, follows previous bans as well. For example, the government banned over 340 combination drugs in March of 2016 and most recently 14 FTCs in June of 2023. Now, one of the reasons for the crackdown on FTCs was due to some state licensing authorities issuing manufacturing licenses for several FTCs without prior clearance from the Central Drug Standard Control Organization, or the CDSCO, leading to the availability of untested and potentially unsafe FTC combination drugs. Now, the impact of the latest ban is expected to be limited for large pharmaceutical companies, which have begun being cautious about irrational FTCs since the past few years. But smaller companies, according to analysts, may be more impacted. Larger pharma companies are also less impacted as they can innovate to create different combinations which are not banned, and the overall focus on safety is even more by larger companies.
All right, Ekta, many thanks for joining us. Now, telecom companies have called for a regulatory parity with OTT messaging services like WhatsApp. In a meeting with the telecom minister, telecom companies flagged that OTT platforms are offering similar communication services and hence should be subject to the same rules and licensing requirements as traditional telecom companies, also stressing that regulatory gap has created an uneven playing field and that this has been detrimental to fair competition. This has been a long-standing demand of telcos. Nestle CEO Mark Schneider has stepped down after 8 years in charge of the Swiss food group. Company veteran Laura Frixe, who led the company's Latin American business, will take over as CEO from the 1st of September. Schneider's exit comes as Nestle struggles to grow sales and attract customers to its premium products. We will head into a break, but up next, the Consumer Affairs Ministry flags concerns about the surge in quick commerce and its impact on Kirana stores. That and more when we return. The rapid rise of quick commerce has caught the attention of the Union Consumer Affairs Ministry. Sources say the government has flagged concerns over the surge of quick commerce and is likely to assess the impact on Kirana stores. Shivani joins us now with the details. Shivani, what are you picking up?
Well, absolutely. The government sources tell us that the Consumer Affairs Ministry has flagged potential competition concerns as the quick commerce sector continues to experience rapid growth in India. The ministry is reportedly worried that the expansion of platforms like Blinkit, Zepto and Swiggy Instamart could pose a significant threat to the small businesses and local Kirana stores, which have long been the backbone of Indian retail landscape. Now, sources indicate that the Consumer Affairs Ministry has already raised these concerns with the Ministry of Corporate Affairs. However, the Ministry of Corporate Affairs believes that these quick commerce players are currently too small to be regulated under at least the digital competition law. Despite this, the government's worry persists. Now, what is it that the government is exactly worried about? What are the concerns? Sources suggest that the Consumer Affairs Ministry is particularly apprehensive about the potential for aggressive discounting strategies and the rapid proliferation of dark stores. These are small warehouses located near to the customers that are being run by these quick commerce platforms. The ministry fears that these practices could severely impact the local Kirana shops, undermining a healthy competition and possibly leading to a monopolistic environment in the retail space. Now, in light of these concerns, the government is considering whether more stringent measures are needed to ensure that the growth of these quick commerce companies does not come at the expense of small businesses and fair competition in the market. Back to you.
All right, Shivani, many thanks for joining us. Prime Minister Modi is in Ukraine's Kyiv for the second leg of his two-nation trip. He is the first Indian Prime Minister to visit the nation since it announced its independence from the Soviet rule in 1991. The Prime Minister and President Zelensky shared a hug as they met, following which they proceeded to a memorial built in the honor of Ukrainian children killed in the war with Russia. The two leaders will discuss possible peaceful resolution steps to the ongoing conflict during their bilateral talks. The Prime Minister arrived in Kyiv from Poland via the Rail Force 1 train and was greeted by the Indian diaspora at the station. The Prime Minister's trip comes 6 weeks after his high-profile visit to Moscow to meet President Putin. Well, with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Don't go anywhere. Back in a moment with more.